dividend stocks. Obviously, with the Fed, everything going on there, dividend stocks are kind of, something that's a controversial issue on when do these stocks start to perform. This is the dividend only account, right? Which this account's been built inside the private group. There's been 2 accounts built in there over time. One's the main public account, which has about $1.6 million in it. And we started that about 5 years ago or so. And then this dividend account, which was started about 3 or 4 years ago. And this portfolio has been doing pretty well until this year. And this year, it's severely underperforming the market. It's down 6%, while the S&P 500 obviously has been doing much better. And so, dividend stocks. When do dividend stocks start to perform? Okay, my opinion is dividend stocks will really start to perform again, I think, late this year and into actually next year. And the reason is you have a situation here where you can get very high rates of return on treasuries. You can get very high rates of returns on even savings accounts, okay? Now, I would say it's a much higher probability that the next move from the Fed is lowering rates rather than raising rates, especially if there's any worries about the economy. And we have CPI continue to come in place, and next thing you know, we're in the 2s, which is possible within the next 2 to 3 months. We're going to be in the 2s. Very, very possible. If that happens, and we got any sort of worries about the economy, the Fed's going to start lowering interest rates. When they start to lower interest rates, I can tell you what you're going to be able to get on savings account treasuries. That has ramifications. It works all through the chain, essentially, okay? And what I think will start to play out there is you're going to have a return of people looking for a lot of these type of dividend stocks. And so they're completely out of favor this year. I think they're going to probably remain out of favor for probably the remainder of the year until the very end of the year. And I think starting next year and moving forward, that's when you're going to see a return of money, because then people are going to be looking out there and they're not going to be able to earn nearly as much on savings account treasuries, and they're going to start looking at some of these dividend stocks that are maybe yielding 3, 4, 5, 6, some even are yielding 7% right now. And they're going to say, I think I want to put my money there. Because right now, a lot of people are looking at it like, I can get 4% on a savings account, I can get 5% on a treasury, 4 or 5% on a treasury. I don't know, why would I want to go chase 4 or 5% in dividend stock right now? Well, once that moment changes, that's when a lot of people start to favor dividend stocks again. And that's when a lot of those stocks start to see major inflows, which obviously that buying pressure leads those shares higher and higher, okay? Which ultimately then leads those yields lower and lower. But if you're a company that's profitability keeps going up, then you can keep raising your dividend yields, obviously. So, my opinion as far as this year goes, I think, especially in this back half of this year, I think it's a phenomenal time to be a buyer of value stocks and a lot of these dividend stocks. Whereas last year, especially in the back half of this year, it was growth stocks for deals all over the place. Growth stocks aren't those sorts of deals now. You can still make money in growth stocks, but they're not those sorts of steal deals. The steal deals now in this market are really a lot of these dividend stocks and a lot of these value stocks. And especially if we get the market to go lower for any reason over this next few months, this is going to open up even a bigger opportunity. So, yeah, and obviously the Fed's not going to keep rates high forever, especially with the government debts. And what that does to the interest the government has to pay, the U.S. government has to pay on the debt, believe me, as soon as CPI comes somewhat in where they're looking, as in the 2s, and we get any sort of economic data that's anything weak, the Fed's going to be quick to cut. And there's reasons, okay? Once again, these folks have bosses. You might not think they do, but they do, believe me. Now, I got an interesting text message actually from a friend this weekend, and he sent me over this tweet, and somebody had tweeted out like, oh, I'm starting to hear people talk about Lambos again. And basically that's just like a saying of like retail's doing great, making so much money that they're trying to figure out like what's their next car they're going to buy. They're going to buy a new Lamborghini or Ferrari or Maserati or well, maybe not Maserati. Okay, what's that? McLaren. Okay, when you have a Plaid, you don't even think about these other cars. Okay, you don't even think about these other cars because, geez, you already got the king of the hill. I mean, we already are the fastest. Why are we going to get something that's lower? It doesn't make sense. Okay, so in all seriousness. That was a tweet that somebody sent out there. And I was thinking, I was like, is that really talk? And I haven't heard anybody talking about no damn Lambos. This is no 2021, okay? This is no 2021 when everybody's trying to figure out where's the next Lambo they're going to buy. Here's my thing, okay? And here's kind of my thinking, right? First off, most retail folks are long gone out of the market. They're not here. We know that factually. Secondly, those of us that have made it through this mess, we're still in recovery. We're still in recovery mode. The public count is still not even back to an all-time high. The all-time high for the public count is just over $2 million. So we got another $300,000 plus here to go until we're just back to where we used to be in the 2021 highs, right? So my whole thing is I'm not even going to feel wealth effect until next year or the year after, until 2024, 2025. I'm still not in that mode of feeling about, oh, let's buy a new car and a new house and things like that. We got a long way to go here, folks. And so I just don't buy that. I don't buy that at all about the whole Lambo thing and the market's just feeling so great that everybody's going to go buy a new Lambo or something like that. We're still recovering, folks. We're still making it back. When we start breaking through new high after new high after new high, that's when the wealth effect starts hitting. And that's when, people start thinking about the new Lambo or what's the new house we're going to buy or, what are we going to do with all this money we're making? But until you get to new highs, you don't feel like, and I don't know why this video is laggy now at this point in time, but you don't feel like, oh man, I'm going to go buy something new or something like that. Like even me personally, I still can't even consider going to buy a new house or going to buy a new car or fancy jewelry or anything like that. Like I'll spend money at a restaurant, like $100 or whatever, but I'm not going to spend, a ton of money on something that is especially, cars and jewelry and those sorts of things. Those are very unproductive assets, if we want to call them that, more like liabilities. So that's kind of my views on that. We got a ways to go here in this game, folks. Ways to go. Talk to me in a few years. That would be a different scenario, but not right now, okay? Not right now. We're focused on the mission right now. We're focused on making the money. We're worried about spending the money down the road, but right now we're focused on making the money. So it's very important for all the other big tech companies. It's very important that AMD succeeds, okay? And so just keep in mind all the other big tech companies are honestly rooting for AMD. And the reason being is you don't want to just have NVIDIA be the only successful guys in the AI market. If that happens on the chip side, if that happens, you are going to pay ridiculous prices for NVIDIA products as a bottom line. So people need AMD to be successful to keep NVIDIA's prices somewhat realistic. You guys have probably heard many of these NVIDIA chips are going for anywhere between, I've heard $10,000, I've heard $30,000, even more than $30,000. Never mind that when you combine them all together and you need all the tech for those chips to all work together, that's another huge amount. So NVIDIA is going to be raking in money for a while here until AMD really is able to be a serious competitor to what NVIDIA has in the market today. As AMD gets there, it's going to be great for all the big tech companies. So it's very important to understand a lot of people are rooting for AMD that are now part of AMD, but they need this company to succeed. You don't want to have just NVIDIA be here, I'm telling you, or NVIDIA is going to make so much money, it's ridiculous. And one other thing I want to touch on here, because obviously you're kind of looking at this and she's talking about this, and I'm sure a lot of people are trying to figure out, is AMD actually 6 months behind NVIDIA, a year behind NVIDIA, 2 years, 3 years? That's what we have trouble figuring out, right? The one thing I'll say about Lisa Su and the team they have at AMD is they're damn good. And I can tell you, that, you can doubt them, but usually they come through. I mean, I remember looking into AMD stock. This is probably 2015 or so. I remember looking into AMD stock, and it was less than $2 a share. I think it was like $1.91 or something like that. It was in the gulag. I know it's hard to think AMD, this amazing company, it was in the gulag. Yes, they were under $5 for a long time, as in years. And this company was down and out. And what Sue and the team's been able to put together over the last 5 to 8 years has been one for the record books, just to be quite frank. So very hard team a very hard team to think they're not going to come through in this situation. They might not, but damn, it's a hard bet to bet against these guys.